Now we will look at the Fibonacci projections. Now why I am dealing with projection earlier than the extension is that projection is also a 2-point structure. Now what happens is this, during this Fibonacci correction, if we see the market bottomed out around 0.5 and 0.618, and then again market came around 0.618 and moved higher. So here from this point to this point I had drawn. For Fibonacci projections I will draw in the reverse direction. Here I start with the end point at the beginning and I draw it in the reverse direction, as you can see. So this is my 0th point and this is 1 and this is 0 for the Fibonacci projections. So as we know that the projections can be till various levels, so normally the ratios that are used for projections are, as we can see, 1.382, 1.5, 1.618, and then the important levels are 2.618, 3.618, 4.236, etc. As we can see that the market went past this 1.618 level and then eventually it crossed back and then started actually consolidating and moved down. We will see more examples. Let me go to a longer term chart. And let me go to the ICICI Bank chart again. Let us look at this move, right? In this move, as we can see that the market corrected almost till 0.786% level and then started moving up. So in this up move, what could have been my target? So to decide that, this was the initial top and the rally started from this point. So I coincide this here with this point, and if I extend this one, I can see that the market on the upside went close to this 200% extension level. For now, let me actually remove the retracement here so that I can, so the extension I can expand a little bit here, or not this line, the next line. See, I am coinciding the 100% move to this point. So here what I could see that from 0 to 1 in the initial move after this correction, when the market was moving higher, the market actually topped out around 1.618, that is 161.8% of this 100% move. So in many of the other moves we will find that the other ratios which are shown here can be useful. Let me look at some other ratios. The Bajaj Auto chart, let me go there. Now, first there was a very big move, then there was a correction, and then there was an up move. So to decide what would be my potential target once this up move has started and has crossed the previous high, let me draw the same thing. Here I am drawing the projection. I am extending it a little bit. See, this up move went to around 1.382 ratio and just corrected from that point. So that is why I want to say that Fibonacci ratio cannot be used on a standalone basis to decide from where the price would turn. It is just a guideline. These are the important regions where the market can turn around. The important thing is that many a times the price would go little above this and then come back, as we saw last time that the price went little above 618 line and then come back. Basically, these are the potential point of reversal. So one has to look at the price action around the line. So suppose the price has moved here and someone could see that the market is getting resisted around this point. He could have actually thought of booking his profit. See, as we can see that the 100% actually projection is also a very significant point. Initially the market went to around 100%, it corrected a bit, but later it started taking support around that 100% line. So we understood that the market could go higher and it went higher, but once it went there, there was a very big candlestick pattern. As we can see, there was a very big bearish engulfing pattern, and after that the market actually reversed. So around these lines, if we find some other evidences like evidences from the indicators or evidences from some candlestick pattern or some basic chart patterns like head and shoulder or double top, then we can think of that there is a potential of going short here and actually with a very small stop loss and then track the trade according to various factors. This is not only for the upside. Fibonacci ratio work well in the downside also. Let me show you in the just dial stock. Here in the just dial stock, I had earlier done some Fibonacci calculations. So let me actually ignore it for the time being. Now when I am talking about this move, see, first this was the up move and then the price coming down started. So I would like to know that what can be the potential target of this down move. So let me do the reverse thing here. As we could see that the price fell around 100% and then bounced back. Let me see some other example in the same chart. So this was a very good up move and then there was a potential down move as this line was breached. So what would have been my target as I was seeing that the price was actually moving downward. So let me remove the earlier line first. So at this point, once this move was over and the price was moving down, so from Fibonacci projections, my target would be somewhere around these lines, and see this 1.618 was breached and the price was still staying below. I could have gone for the next target. So this occurs in this way. First the 100% is breached, then I would think that okay, the next 1.382, I will see the price action. If the price is sustaining and taking support around this, then I would think that this is the reversal point. But if it is breaching and staying 1 or 2 days below that with substantial amount of margin, I would think that the prices would go down further as it happened here.